My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. I'll be with my friends. I'm just trying to keep from losing too much money on days like today. My job's not just to entertain, but to educate you about how days like this happen. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. Sometimes the stock market feels like a mosaic, where no one piece tells you anything. But when you look at the totality, everything becomes crystal clear. So in a day where the averages started strong but then plummeted in a terrible reversal, Dow finishing down 249 points, S&P slipping 0.88%, NASDAQ losing 1.02%. I hate these kinds of downturns. Let me give you my impression of what's really driving the action. First things first, when you do look at the whole piece of the pie, when you try to figure out what it looks like, it's saying that we have not one but two economies right now. There's the goods economy and the services economy. Now, I've never seen the goods economy turn so weak so quickly. Just look at Mattel. Everyone likes toys, and we had them on last night. The toy maker was going full board to the holidays. Made sense. All of its toys were coming off record years, and everything just seemed to stop. Sales dried up in October, November. Then the holiday gift-giving season was truly truncated, severely so. In the end, Mattel wound up with too much toy inventory, just a ton of it, and not enough sales. That's every retailer's nightmare. And it's not just Barbie dolls. Mattel's emblematic of most consumer discretionary goods. Sales at almost every retailer have hit a wall. Maybe we just didn't need more things. Maybe we were full up after the pandemic. On the other hand, when you look at travel and leisure space, everything's spectacular. If you've taken a flight lately, you know they're always packed, no matter what time you travel, no matter where you're going. Of course, there are other constraints on the airlines, but the underlying demand is extraordinary. When you get to where you have to go, the hotels are booked, and they are raising prices, as Hilton told us today. That company's stock traded up $3.50 and had been as high as $5.50 despite, well, then, of course, we had the hideous afternoon trading. Why don't you consider the cruise lines? We've been in wave season when people book the most cruises. Royal Caribbean, Norwegian, and Carnival are racking up amazing numbers. It's like we all forgot those COVID Petri dish jokes from a couple of years ago. Then again, that's the pattern with cruise lines, right? I mean, you have some food poisoning stories, some horror, sales go down, they come right back up. It's just what happens. Look, I've told you before, the travel and leisure stocks are booming thanks to the life is too short zeitgeist. We all know someone who died during the pandemic. Many people have been trapped in jobs they didn't know they despised until COVID hit. Others got to see the freedom that comes with working from home or not working and collecting generous unemployment benefits from the government with a check or two. This COVID era created a virtual landslide of reevaluation, contemplation, and ultimately resignation. That's been pretty well covered. But the sheer scale of this pivot was so extraordinary that nobody was ready for it, and many pronounced it over a year ago. It isn't. People learn what it's like to be untethered, and they aren't going to take it anymore. Hey, but you want losers here? It's the flip side of the coin. Take a firm, okay? That's the buy now, pay later financial technology company. It's basically a modern version of layaway. The stock was down sharply today, and it wasn't because of a spike in bad debts. In fact, the opposite happened. Bad debts dropped. But usage also declined dramatically, especially for electronics purchases. We know electronics has been an astonishingly bad group. Dell saw a 37% decline in PC sales this last quarter, triggering more than 6,500 layoffs. Now, a firm's founder and CEO, Max Levchin, seemed baffled that there could be such a massive pullback in spending. People just weren't buying things. It destroyed his whole growth narrative. By the way, they don't use a firm for travel and leisure. It's really for goods. Of course, a firm's been a total dog for ages, but things can always get worse, especially if you're in a bad industry. These guys are mostly tied to purchase of goods, as I said, and right now that's the kiss of death. And there's zero signs that I've seen this turn. If we've got a goods bear market and a services bull market, then why is everything so confusing? Well, I've got a new theory on that. And it took some time, but it's coming around. I think it's not simple. See, there's a key point that's being overlooked by everyone in the media and many in the stock market. Initially coming out of the pandemic, the travel and leisure spike was a broad-based thing. But now it's no longer Big Ten. It seems increasingly like something only the wealthier people can afford. Now, I first heard this story from Kevin Hochman. He's the CEO of Brinker's parent, Brinker, that's the parent company of Chili's. This company always prided itself on offering food for everyone, but inflation has made it so many meals are too expensive for many people, working people. Rather than making everything available to working people, to everybody, Brinker's raising prices on the bulk of its dishes, while leaving some value options to keep things accessible. With that strategy, they're now making more money, though, because wealthy consumers are spending on services, think liquor and expensive dishes, like there's no tomorrow. We heard a similar tale from Brian Niccol, the CEO of Chipotle, which took a lot of price and therefore priced out to some degree those who'd normally be able to afford the burritos. Again, though, the rich more than made up for the slack. How about Disney? Their theme parks are no longer considered a bargain for anyone, save expensive. People are really well off. Again, though, the well-off have more than enough money to fill the parks, and they are overflowing. I'm going to go a step further. It's obscured, but the rich are even spending on goods. Right now, Ralph Lauren and Tapestry, parent of Coach, and Kate Spade and Stuart Weitzman reported splendid numbers. We just don't have enough awareness of this height of this trend because of high-end stores. They're not public. Mass retailers sure are. Oh, by the way, that's Ad and Sonos. That was another one. Very expensive system. They did great. Expensive things are selling. What do we make of this? How do we make money off it? Right now, I think it's fair to say we've only had one economic one, one strong number. Every other number's been weak. And what is that strong number? It's the most important of all. It's the non-farm payroll report. And it was truly, truly high. Every other data point's been weak. Now, what happens if you go under the hood of that data of the non-farm report? Well, we saw fair to middling hiring in pretty much every private sector, except professional and business services, and more importantly, leisure and hospitality. Those were on fire. Professional grew by 82,000 jobs. I don't yet have a thesis on that. But hospitality, which encompasses travel and leisure, that gained 128,000. And I think that number is about to get even stronger because it's still below the pre-pandemic level of 495,000. And we need more people. It stands to reason that the travel boom will stimulate enough business that those jobs will be filled. So if you're a Fed official, you need to recognize the bifurcation. While the biggest spurt to hiring certainly isn't over, it is isolated certain segments. Maybe you should asterisk some of this. Travel and leisure booming, but at the same time, a huge part of the economy in retail is in real trouble. The Bed Bath & Beyonds of the world most likely won't come back. But the high ends like the Tiffany's purchased by LVMH, they are crushing it. But that doesn't represent the real economy. Now, you have to ask, can the Fed figure out this mosaic? Does the Fed want everyone to be able to afford Chili's? Are they worried that the price of food, which is just as important as labor, has gotten too tight? Do they really want to solve the problem by effectively throwing a lot more people out of work? It's really hard. All I can say is that while yes, I'm in favor of the Fed hitting us with 2 more rate hikes, quarter points, this earnings season has proven conclusively that even though the rich are spending their darn fool heads off, the poor can no longer afford to get a really good burger or burrito. Now, it's not the Fed's job to level the playing field, make the rich equal to the poor. Maybe Jay Powell's made more progress fighting inflation than their colleagues want to believe, except for this one area. Bottom line, I think price stability, therefore, is right around the corner. And only the growth in travel and leisure will keep things from making it so that the economy's not too hot. Then, after those positions are filled, maybe the Fed will declare victory and stop bringing the pain. They just need to be aware there's really only one area of strength left in this entire economy. And sometimes the Fed has to say, you know what? Let's let that cool off, but recognize that the economy's not so hot anymore. Let's go to Jeff in California. Jeff.
Hey, Jimmy Chill. I'm having a hard time choosing between 2 great stocks that you said were absolutely wonderful, and that is CrowdStrike and Palo Alto. Now, CrowdStrike moves kind of wild and crazy, and it's up 8% year-to-date. Palo Alto's kind of calm, and it's up 19% year-to-date. So Palo Alto's kind of a smooth ride, kind of boring. And
well, Palo Alto is my favorite of those 2. That is in my bullpen for the Chapel Trust. By the way, tonight we got Alteryx was good. We got Cloudflare was good. That's more cybersecurity. I think CrowdStrike and Palo Alto networks will go up because Fortinet was good, too. So that's a great idea, and I suggest that you buy Palo Alto right here. Let's go to Rick in California. Rick.
Hey, Jim, how you doing?
I am doing well, thank you. How about you?
Wonderful, thanks. Jim, I think that you'd have to be a knucklehead to doubt the long-term promise of Eli Lilly. But with that said, since the 1st of December, the slide has been pretty ugly. That is, up until just a few days ago. It seems to have bottomed last week, and today it passed through its 20-day moving average. Do you think this is the beginning of the rocket ship we're all looking for?
Well, we know interest rates went up today, which is typically not when you buy the drug stocks. But I will tell you that the whole group's been under a great deal of pressure. Mounjaro, look, this is a wonder drug. This is the drug that promotes weight loss. It's not yet approved for people. It's only who are obese. It's just for diabetes. Once that approved, then everybody will know, and you need to be in it now and let others take you out 100 points from now. How about Matt in Texas, please? Matt.
Mr. Cramer, how's it going? Good evening.
I'm having a good day. How about you, Matt?
Doing well. Beautiful weather down here. All right. You recently hosted the CEO of a consumer staple company who told a story of a 7-year transformation that rewarded the company with leading price elasticity and attractive runway for growth. Posted a really good quarter back in January, but since then stock's been kind of like trickling down a bit. It yields about 3 3/4, about 15 times next year's earnings. What are your thoughts on ConAgra as an addition to my dividend portfolio?
The whole segment has been crushed. And you hit upon the one that had the biggest upside surprise. By the way, Kellogg's number was good today, too. Nobody cared. I think it's a great place to start. I was thinking of Smucker's there for a second, to Smart. A great place to start buying, but don't buy all at once because the group is in bear market mode. This group has fallen out of favor, and all you have to do is look at the stock of Pepsi, which had one of the best quarters I have seen this year. And what did it do? It went up $1.50 after being up more than 3 points at one point today. All right, I think price stability is right around the corner, and it's just travel and leisure for the rich. That's all that's left and strong. On My Money tonight, XPO fell today after earnings, so could this be an outsized reaction and a buying opportunity? I'm taking a close look at the action with the CEO because it was baffling. Then the second Iger era has begun at Disney. Amid a major restructuring, is the magic back in the house of the mouse? I'm digging the quarter and sharing what you need to know. And soaring after earnings, does New Relic stock have a new lease on life? Enterprise Software trying to make a comeback here. I'm deciphering the numbers with the company's top brands. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.